Last week, President Joe Biden signed an executive order regarding government oversight of cryptocurrency, which so far is being seen by the crypto industry as a positive step. The order, which we first learned about last month, tasks government agencies with producing reports on the risks of digital assets, as well as opportunities they present, including the creation of an official U.S. digital currency. According to a statement released by the White House, the Biden administration sees the rise in digital assets as an opportunity to reinforce American leadership in the global financial system and at the technological frontier. However, the administration says cryptocurrency also has substantial implications for consumer protection, financial stability, national security, and climate risk. Among other things, the order directs U.S. agencies to recommend new policies that protect the country from any illicit activity and national security risks related to digital assets. But it isn't all about defense. The order also tells the Department of Commerce to work across the U.S. government in establishing a framework to drive U.S. competitiveness and leadership in, and leveraging of digital asset technologies, and to assess the technological infrastructure and capacity needs for a potential U.S. central bank digital currency in a manner that protects Americans' interests. But what exactly is a central bank digital currency? The Federal Reserve explains that a central bank digital currency is generally defined as a digital liability of a central bank that is widely available to the general public. That's in contrast to the two current types of central bank money: physical currency issued by the Federal Reserve and digital balances held by commercial banks at the Federal Reserve. While Americans have long held money predominantly in digital form, for example in bank accounts, payment apps, or through online transactions, a central bank digital currency would differ from existing digital money available to the general public, because a central bank digital currency would be a liability of the Federal Reserve, not of a commercial bank. A U.S.-issued digital currency would in some ways be similar to stablecoin that are pegged to the value of the dollar. The major difference being that central bank digital currencies would be issued by the Federal Reserve itself. Figures in the crypto community were quick to celebrate Biden's announcement to look into a government-issued digital currency. "This is a hopeful moment," wrote Faryar Shirzad, chief policy officer at Coinbase. The value of Bitcoin rose nearly 8% after Treasury Secretary Janet Yellen prematurely released some of the details of the Biden crypto plan on the Treasury Department's website the day before the executive order was announced and signed. But the optimism couldn't sustain the price, which has been fluctuating a lot. Regarding a possible U.S. digital currency, nothing is settled yet, but the White House is encouraging the Federal Reserve to continue its research, development, and assessment efforts for a central bank digital currency. The report ordered by Biden is to be produced by the Secretary of the Treasury in consultation with other government agencies. The report is supposed to analyze the potential implications of a digital currency on economic growth, stability, and financial inclusion, the relationship between a U.S.-issued digital currency and digital assets administered by the private sector, the future of sovereign and privately produced money globally, and implications for our financial system and democracy. A U.S. digital currency would reduce or even eliminate transaction fees, since exchanges would no longer go through banks, bank cards, or apps that take commissions on every payment. Proponents say it would help people without bank accounts, about 5% of households in the U.S., and could make it easier for the government to pay benefits. There are risks like a system failure or a cyber attack, and there are also questions about privacy, as the government could theoretically have access to all transactions. The banking system could also be undermined, as banks currently use customers' deposits to lend to others, and with a digital dollar, they could have less money at their disposal. International transfers, often slow and expensive to make, could be greatly eased. An operation that currently takes 2 days to be validated could be done in 1 hour. From China to India, other countries are already working on digital versions of their own currencies, but there is no evidence to suggest being first to the market provides any significant or material advantages. The overwhelming dominance of the dollar gives the U.S. the luxury of learning from other countries. If properly designed, a digital dollar could certainly be more preferable for domestic use than a cryptocurrency. Don't forget to leave a like and subscribe for more. World of Finance TV has videos every Monday and Friday.